Dave, we're at 18 here before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And that means it's time to check in and find out what's going on Wall Street this morning. I wouldn't call it a bloodbath yesterday because we've seen a whole heck of a lot worse, but all of a sudden the markets, we don't follow that terribly carefully. The bond markets are suddenly driving the stock market today, and Phillip Statler is on the line to talk about it from Statler Financial Services. Good morning, sir.
Hey, good morning, Dave. Hope you're doing well as we're just struggling with interest rates right now, the bonds being downgraded. I mean, all of that is impacting not just the bond market, but now it's really starting to impact the stock market as well.
And I was flippantly saying before we went on the air that, doggone, the bond market is even making the Democrats talk about the fact that we're borrowing too much money. I mean, the entire dialogue has been, cut on one side of Washington, and everybody's saying, no, don't cut on the other side. All of a sudden now, even I'm seeing Democrat talking heads talking about it. We got to do something about our debt because, hey, our credit is downgraded, and that was like a crisis. It's like all of a sudden all the congressmen are ending up having to buy marginal credit cards, right?
Well, yeah, and yet we still, we get a bill passed last night very closely by one vote, basically, that's going to increase our deficit, and I understand that, that's a way to really kind of grow our economy is by cutting taxes. And I've been a proponent of that always, but you got to cut spending. You got to cut spending as well. And I just don't see that happening fast enough to keep up with the deficit.
And frankly, the fact that the administration was pushing for that, it disturbs me a little bit because I have never trusted rose-colored glasses. I mean, the hope on behalf of the administration is that the tariff income, this big bonanza of tariff income that we're getting, which early indications was a pleasant surprise, but it's not going to run the government, people. That's a pretty almost fait accompli. And the hopes are on behalf of the people that are passing it that we'll end up getting enough money off of our new tariff policy that we'll end up being able to keep income taxes low, which is a nice thought, but I still say we're whistling in the graveyard. We're still got a deficit right now that's at the point where if we took every single dollar from the people that had an AGI of over $1 million, we still wouldn't be able to pay off the deficit. And it's just it ain't going to happen, people. We need to have systemic changes somehow. And the bond market has finally evidently caught up with that point.
Well, I think so. I mean, we know historically, if you go back to the Reagan administration, that cutting taxes does work. It does add money to spend, and that brings back our economy. But at some point, you've got to cut spending as well to really start to balance that budget. You and I, we have to balance our budgets. The state of Florida has to balance their budget. The federal government needs to learn to balance their budget.
Would be nice. Net result of all that conversation yesterday, and what I understand was maybe not a disastrous 20-year bond auction, at the very least wasn't a good one. Dow was down by 817 points yesterday. The Standard & Poor's was down by 96. NASDAQ was down by 270. To give you a percentage number, the Dow was the big loser of the big three, was down 1.91% yesterday, and some of that was responded to in the bond markets. The 10-year bond up like 13 basis points up to 4.6%. The 30-year bond from the federal government is now yielding 5.14%. That doesn't bode well for the mortgage market either, does it?
No, it really doesn't. Let's just add in really the big loser yesterday was the Russell 2000, down 2.8%.
I was semi-afraid you were going to tell me that. That's an index I don't see much. You know who the big winner was? Bitcoin. It's up to a new record high again now. It closed up around 110,000 yesterday on the Bitcoin market. So gold isn't doing too badly. Silver isn't doing too badly. But Bitcoin's having a bonanza right now.
Yeah, it really is. Right now, it's actually up 3% from yesterday. It's at 111,000.
Holy crap! Yeah, I do. I see it now in my current shot. I'm looking at 110,000, and it's amazing to me what we're doing to try to avoid the pitfalls on the equity market right now. We're even taking a flyer on Bitcoin, which you and I can probably guess is going to be back down about 70 for one reason or another, coming up probably about 6 months from now, right?
Yep, yep. It seems to be pretty volatile.
It's on the volatile side, that's true. Bottom line was, though, we're being driven by the bond market, which is a market we don't look at too terribly much. They had an auction yesterday, and it was not a good 20-year bond auction, and that kind of scared us down the line. Other indications going on, we're getting into another tiff with China. The negotiations over in Switzerland aren't going as well as they wanted them to. The U.S. and China argued over chip restrictions again yesterday, and that's got NVIDIA changing underwear because their primary export target is mainland China. So the clouds are still forming on the trade front in advance of all the new tariffs that President Trump has promised within the next week or so. That's not going to make folks happy. And, oh, yes, a little sidebar report I saw this morning. Guess what? The average credit score of consumers in this country, kind of sliding along with our federal bonds, our credit scores as a people are trending downward. Does that surprise anybody?
Not really, given the credit card debts that out there and the interest rates that's starting to pile up on those.
Absolutely. So it's an unsettled world this morning on the financial markets. Does anybody have any good news for us as far as corporate reports out this morning?
Hey, on corporate reports, we do have a big winner today. Advanced Auto Parts.
Whoa!
Yeah, they are doing really well this morning. And here's the deal. They lost money, Dave.
If I
They
remember,
lost.
they had a rough quarter last quarter, so a pleasant surprise, even if it's on the negative side, ought to be good.
I guess so. They lost 22 cents a share. They're expected to lose 82 cents a share. Revenue was ahead of expectations. They hit it out of the park. They're up this morning 33.8%.
That is not a cheap stock either.
Well, it is now, Dave, because they did a 20-for-1 stock split.
Ah, okay. If I remember correctly, I think the last time we looked at them, they're like $1,000 a share. They finally split it down to affordable, did they?
Yeah, yeah. So it's like right now it would be $41.90, it says.
Wow, that's still
Yeah.
33%. And I love it. That's
Yeah,
got to
not
make
bad at
somebody
all.
happy. They're not a Dow component or anything, are they?
I don't think so. I don't think so.
Okay.
Then we had Urban Outfitters. They reported and did fairly well. They came in at $1.16 a share versus 84 cents. Revenue, again, ahead of expectations. They're trading up a little over 17.25%.
We'll take that. I like seeing happy news coming out when they're talking about the markets.
Yeah, that is good, isn't it? But it's not all happy news, right? So we had the likes of, let me see who it was. Somebody didn't do well. Analog device. No, they were up. I mean, everybody's up this morning is based on earnings anyway. Zoom Communications reported they beat by about 12 cents a share. Revenue was in line with expectations. They're up about 0.9% this morning. Pitney Bowes. Now, Pitney Bowes, I didn't even know they still existed, right? They're the old machines, the old postage machine things. They had a good well, they didn't have a good quarter. They have a change in management, so to speak. They have a new chief officer and chairman of the board, so they're up 9% this morning.
I think they've developed a new online method to replace their mechanical machines, and I think that's probably going to get them a little bit out of the grave. But yeah, I haven't been called by a Pitney Bowes person trying to sell me a postage meter now in probably 10 years. Have you?
No, And then now health insurance stocks are getting hammered again this morning, Dave. The Center for Medicare and Medicaid Services announced that they're going to start an aggressive audit, expansion of their audit of all the Medicare Advantage plans out there. So like Humana is down 5.5, CVS Health is down 3, United Health Group's down another 2.5. So everybody's in that industry is getting beat up based on that threat of more aggressive audits.
Health insurance is just not having a good day for the last couple of weeks, have they?
No, they really haven't.
Absolutely not. Resetting the table, negative day on the equities yesterday, basically top to bottom with losses in the up to and including the 2% range on some of the indexes. I'm seeing a need downward on my futures this morning, 45 minutes before we open. What are we looking at there?
Well, that knee should be picking up a little bit, Dave. We've had some pretty good improvements. I mean, when I first looked, the Dow was down over 200 points. Now it's down about 1/3%. That's $113. S&P 500 is down less than 1/10%, and the Nasdaq 100 is actually positive by almost 1/10%. So we've got some improvements, even though we still have some red ink on that board. On the other side, we got silver trading down 1.5, gold's down about 0.4, and crude oil down 1.5 to $60.68 a barrel.
Well, at least we got some good news. One thing going down is good news, isn't it?
It is. It is.
It's time to fill up my gas tank. Everything's pretty much red ink across the ponds over in the Asian Rim. Nobody wanted to hear us go into contortions about whether or not we're going to pay our bills, so even the Chinese mainland markets were down by 0.5% at the close. Asia's pretty much solid red at the end of the day at 6 a.m. our time. Over in Europe, they're halfway through their trading day. They ain't any happier than the Asian Rim are. Average European index is down by a little over 1% halfway through the European trading day. It's about time we get some good news, Phillip, and until we do, minimizing the risk in my retirement fund seems like the smart thing to do. How do I get a hold of you to be able to get my risk under control?
Dave, that's why I developed the core retirement design to help people really, truly design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at newstalk730am.com. Remember, we stream you all over the world, sir. We're proud of that stuff. It costs us a mint. We're going to promote it. So
that's right. There you go.
We'll see you tomorrow morning. It's only Thursday, isn't it?
It's only Thursday. Yeah, we got one more day.
Yeah, we're cool. I'll see you tomorrow, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Surprise parties.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Bye.